Hey everybody, welcome to Friday Fire. All the spice from the week is now here. So thank you all for coming. And let's get into this. 36 big nuggets, weaving a tapestry of all the stuff you need to know. And things are looking pretty darn bullish, as we've been bullish since the pre-Fed rate cut run. And things are just running nonstop, but they will continue to run. And I'll show you why. Thank you, Hector, for coming. Zeno, Nick, mods, everybody else. Appreciate you all. And of course, Anglo-Blackson, like an Anglo-Saxon. So here we are. It's Friday. What's going on in the world? Well, we are now 161 days after the halving. That's 90 plus 71. And things are at last getting back to where they need to be. US doesn't stop printing. China's printing too. We'll talk about China. October's in 3 days. Liquidity is rising. We broke 100 trillion. We'll get into that too. People are feeling bullish, and there's so much more good news too. So let's go. Hope everything is working. And of course, not financial advice. Shout out to Patreon. Make this all possible every single day. Without your support, the team, etc., I'm just so grateful. But this is from Gloria Maria, DC 7757. I'm so honored to be part of Patreon and follow all your posts. I'm learning more than just about finance. Yes, it's so important you mention that because you've got to be very well-rounded in every perspective to be in the investment business. And a huge part of it is up here. So I spend a lot of time focusing on things like the mentality a person needs to have, as well as health. These are critical items. But let's get into the data and the numbers. First of all, fear and greed. We're back to greed, ladies and gentlemen. A couple of days ago, yesterday we were neutral. A month ago, we were terrified. We had to change our pants. Now we're back to greed. And that's how fast things move. Let's look at where we are so far. Rectember didn't happen. I had a theory because we had the huge cataclysmic event of the reverse carry trade on the 5th of August, 2024. I said, maybe we could dodge a Rectember. And we did so far. So Bitcoin returns, we're up 11.4, 11.5% so far for September. And I want to look at this chart and share a couple of things, because when I look at this, I always try to find patterns, right? We're in a bull year. So 2024 is like 2020, is like 2016, it was like 2012, whatever. But the average number of red months per year is about 4.75. We've only had 3 years where we've only had 3 negative months. And we had some crazy outliers in the early years. We had some bad years. We had one year, I think we had 8 negative months, but that's not going to happen in a bull run. The question is, for those 3 years that I only had 3 negative months, could this be one? And the reason I think it could be is because Q4 is always bullish. Always, almost always, especially in a bull run. So, given that pattern, this could be a record year of a very low number of negative months. Anyhow, let's look at some more stuff that we look at very carefully. So there's 2 things that we're back on top of again. And we're back. It's basically during a bull run, as I've always said, we are rarely under the short-term holder realized price and rarely under the 200-day moving average. If you ever see these things happen, that's basically a buy signal. And we are so back, and it's been a great week for the bulls, especially since the Fed 50 basis point cut. We've been up 22% in the past 3 weeks. The key indicators we're looking at right here, 200-day moving average in gold. We are above that. That's about 63K. And the other one, the short-term holder cost basis, we are above that too. And both have been surpassed. And the macro looks really good. Liquidity is going up. Rates are going down. There's nothing but bullishness on the horizon for Q4. And TradFi is seeing it too as well. Now, short-term holder MVRV is also at a similar point as it was back in November 2023. Why do we care about that? Well, that was before we shot up from about $25,000, $30,000 straight up to $73,000. That level kicked off a huge rally. If history repeats, which it often does, this metric crossing the 155-day moving average of MVRV could kick us off next. This makes me pretty bullish. Now let's look at the ETFs as well. Boom. Guess who else is back? The ETFs are back. Big day yesterday. $366 million purchased in one day. Way above pink, which is average. This could be the big zone 3 of accumulation. And 5,610 Bitcoin were absorbed yesterday alone after 2 very good days the previous 2 days as well. That's a big bag. That is, what, 12.5 times daily issuance? Yeah, and there's more good stuff coming too. Well, for those people that don't like BlackRock won't find this good news, but BlackRock is now at $24 billion in Bitcoin, and they're approaching 2% of supply. That assumes no Bitcoin is, of course, lost or gone forever. So they own a lot more than 2% based on my 15 million max number of Bitcoin that will ever exist. So for everybody who thinks that there will be 21 million Bitcoin, nope. And another crazy bullish chart too. We talk a lot, and speaking of twos. I like patterns and numbers. This one is the OTC desk from Bitcoin News, CryptoQuant. And you can see here the 30-day change in OTC Bitcoin balance desks fell to a 2-month low, and we are down from 400,000 Bitcoin down to 240,000 Bitcoin. This is probably because people like Michael Saylor are buying boatloads. People like BlackRock are buying boatloads, and they're all doing it OTC. Okay, so you can see how much it can change in less than 8 weeks. Now, I was granted a little bit alarmed when I saw the OTC desks having 400,000 Bitcoin 2 months ago. Now, after seeing it falling so fast, I'm more, comfortable with it, with everything that's going on. So more goodness there. And in addition, let's look at the cycles of where we are. More interesting news and more patterns I can maybe see from this. First of all, I added some big triangles. And we are now exactly at the stage, if you imagine the cycles beginning. So we have July 2010 to November 2011. There was a short one. And then we have November 2011 to January 2015, January 2015 to December 2018, all 4-year cycles, December 2018 to November 2022, and November 2022 to present. And now we are exactly at the same level, not as the 2010 or 2015 or 2010 or 2011 cycle, but we are at the same level right now at this point in time as the 2015 and 2018 cycles on the right. Now, a couple of things you can pick up from this, and I added a big green arrow to show you where we are today. I call this the 2022 cycle because it kicked off in November 2022. So far, we're up 4.12x from the bottom. At the same points in time, the 2018 and the 2015 cycle were also up exactly this amount, 4.12x. What happened next is very interesting. So 2015, it went to over 100x off the bottom, 100x. But then it closed the end of the period only up 18x. Second, 2018, we went as high as about 22x, and it closed the period at about 4.88x. So it went up 5x. The point you have here that you have to see, and why we're so focused, and we're building ways in which we can take profits, you watch these cycles and you can see what happens. Before the end of the cycle, it'll go up and then it'll go down. The bear market will kick in. The key point in time to look at from this chart that you need to be aware of is circa November 2025. I'm going to blow that up again. If you go to where the spike is from all the previous 2 cycles, circa 1,050 days into the cycle, and that will take us to November 2025. That's when maybe because this cycle is, everything's happening a bit earlier, the top could happen earlier than that. Maybe we get a constant bid from the ETFs. I'm not sure, but we will be tracking this, and I have invested years making sure we do not miss the top, and also making sure that we optimize profit taking. I'm going to do a TA masterclass again next week on profit taking. Let me know if you're interested in that. It'll be a detailed scientific mathematical approach to how you take profits and how you can optimize how much profit you take And it show you how little you actually leave on the table by selling out early too. It's very fascinating. So let me know, comment below if you're interested in that. It will be deep, and I'll do a live Q&A after, because it is the most important thing. And remember, a lot of people believe we're early. No, we're more than halfway through the bull run. So start getting your head ready for that as well. And this was another cool piece of Bitcoin news too, from Cantor Fitzgerald. I think it was Howard Lutnick. They manage about $13.2 billion. And he said Bitcoin should be treated like gold and oil. And when you truly understand Bitcoin, it's hard to see it any other way. And he's a super Bitcoin bull. But let's have a look at gold and oil. So there's I've been talking probably more this year about gold than ever before, because gold has been on a tear. The question is why? And the answer is because the world is nervous about what's going on in the world. All right, the world is teetering on the edge. Therefore, you need hard assets. You need life rafts. And here, this is a cool chart. Shout out to Sanjay as well. This is gold. It's trading at 40-year extremes. The price of gold have seen a historic rally this year, up 29%. And as a result, gold is now 15% above its 200-day moving average. And it rarely does this. It's now 2 standard deviations away. And this is the widest gap since 2020. And it rarely is at this level, ladies and gentlemen. So odds are it will mean revert. But remember as well, fiat is debasing. So when you have gold at, say, $2,500, and you compare that to the past, of course, $2,500 probably buys you like a shopping cart of groceries today, but a few years ago, it'll buy you 5 shopping carts. So that's important to take into account as well. But it is a big anomaly. And the other thing that's exciting about this, and the reason I care, is because, yes, Bitcoin has outperformed gold. It always does, but it hasn't at this level, which means Bitcoin will follow. It's lagging behind. It will follow, and it will follow global liquidity pumping too, which we'll get to in a second. Also, speaking of oil, it's kind of an interesting chart. The current administration, as it comes to an end, they have, for whatever reason, drained the strategic petroleum reserve. And some people believe that risks national security for short-term political gain, because if you can use your oil reserves, you can make inflation look a bit lower than it was. But this is the lowest level of strategic oil reserve the United States has had in over 40 years, and it has some people alarmed. I think as we move towards electrification, as far as I'm concerned, maybe oil is less important. Who knows? Also, with the global economy slowing down a little bit, there'll be less demand for oil, and that should keep the OPEC prices down a little bit too. So we'll see. Now, another reminder before we get into all the other news, another reminder of why we Bitcoin. Again, this little chart here from the IMF, with CBDCs, we can precisely control what people can and can't own. Also, what kind of use this money can be programmed in for. Like you can buy food only, or certain type of GMO food or whatever. And this is why, at least to me, central bank digital currencies are terrifying. And yes, the IMF have a plan. So do many Western governments. After everything we've seen in early 2020, we know what governments will try and do. If they can turn off your money, or if you misbehave or do not follow mandates, they can make you follow those mandates. When you control the money, you control the plebeians, okay? This is why we Bitcoin. Have an emergency bag so you won't have to succumb to this. I'm hoping this never happens, but it's already happening. And it's going to continue to happen, I'm afraid. Now, let's get into some zombie coins. And again, as I always say, hope is not a strategy. People are still clinging to hope. Again, I repeat, we're over halfway through the bull market. And these things in the red box, 80 to 90% of them, are going to continue to drastically underperform. This is a metric I created in the last bull run, and it works. So basically, you can see here, these are the things that are, distance from their all-time high. The simple math is, if they do not achieve their all-time high or don't even get close to it over halfway through a bull run, they're probably zombies. And shout out to Cardano, 86.9% from all-time high. Algorand, 97%. XRP, 85%. Hedera, 89%. XLM, 90%. ICP, 97.9%. VeChain, 90%. Polkadot, 91%. I mentioned VeChain because I was in an Uber in Singapore and we were talking. And of course, we're talking about crazy. Why you here? A crypto conference. I said, oh, I have all my money in VeChain. I think it's going to be good. I said, dude, no, don't. And this is his livelihood. They cling and they hold for years and it goes nowhere. All right. Now, then people say, oh, but altcoin season hasn't hit yet. Therefore, these things will rebound once it hits. Yes, a rising tide will float all boats, but they will still underperform. Remember that, okay? The data's there. Stop clinging to dreams, everybody. Don't do it. Don't do it. All right, let's speak about Solana here. Cool little piece of Sol Metrics Du Jour. Stablecoin market cap is nearly $4 billion. Made nearly $837,000 in fees yesterday, as well as revenue, $418,000. Volume, $1 billion. Total raise. Cool thing about this is the amount raised, $315 million. A lot of flow. Price, 153. Now it's 157. Sol fully diluted value is 89 billion. Current market cap, 71 billion. Again, it's thriving. This chain is doing good. And where is the SOL TVL at? Jito, $2 billion. Camino, $1.56 billion. Jupiter, $1.2 billion. And Marinade, $1.2 billion. Radium even has $1 billion in it. So you can see here, all of these chains have a lot of action on them as well. Now, let's talk about MicroStrategy. This has been on a tear, ladies and gentlemen. Not only has Michael Saylor been buying Bitcoin, issuing debt at 0.6% interest rate. Wouldn't it be nice to borrow $1 billion at that level? Anyhow, it's up 56% in 18 days. They now have spent $10 billion on Bitcoin. And they bought another 7,500 Bitcoins last week. That's 40 Bitcoin purchases in just 4 years. And again, total investment is $10 billion. And their bag of $10 billion is up over 60%. And the stock is tied to Bitcoin performance, creating a double effect. Okay? You borrow money, 0% to buy Bitcoin. Bitcoin goes up in value. Your interest in debt is nothing. That's the infinite money glitch. That's what they've been doing for the longest time. And they continue to do so. And this continues to outperform Bitcoin. And all the MicroStrategy haters that I've dealt with since 2020 are now coming around. Now they get it. Now they understand how this puppy works. So shout out to the over 1,000 MicroStrategy millionaires in the community. It's been a game changer and it continues to outperform, which is awesome. Now, there's other stuff happening with MicroStrategy too. This is the need for speed, need for MicroStrategy speed. And Eric Balchunas found this to be very wild. There's two things in this chart here. There's the 2x MicroStrategy ETF, which launched just 5 days ago. They've already taken in $72 million in assets under management. And for context, that puts it in the top 20% of the 515 ETFs launched this year. And that is also despite the 1.75x MicroStrategy ETF, which has a head start. And now they have 357 million in their fund as well. That's the top 8% of new launches. Basically, both have robust liquidity and everybody wants more MicroStrategy, more tools, more access. And for all the people that thought and believed, oh, the ETFs are going to kill MicroStrategy. No, wrong again. So that's why I keep buying it. Don't sell it. Anyway, and shout out to Josh as well in the community. The QQQ really needs MicroStrategy. Here you can see the gainers today up nearly $12, whereas the QQQ is down. Again, watch this space. It's the infinite money glitch, ladies and gentlemen. And a little bit on Tesla news. EV share continues to grow. You read any newspaper, they'll say EVs are dead. No, they're not. 8% year-over-year increase in sales and volume. And close to 8% is the EV share in the US, nears 9%. It's going to go S-curve. Once it goes beyond 5%, it goes S-curve vertical. Expect ICE to get obliterated over the next 3 years. Mark my words again. And people are excited. And Tesla's ramping into 1010. This is the chart. And what I want you to see here is just look at this. So far, like since April, we had a sub $140 buying opportunity. We had a whole bunch of months to stack at 150, 160 bucks. And then we got another grab bag at 160 back in August. What a dream. Now we are, let's check the real-time price of MicroStrategy. No, Tesla. I'm getting all my assets confused. Tesla's 261 as we speak. So it's up another, like it's trickling up. It's up $6.50 today. Not bad. But the point is, yes, I know it's off an all-time high. But when you see this volatility, these buying opportunities, that's when you run in and grab more DCA down or build a bag. That's what we've been doing for 20 months now, which has been mind-blowing. I was down as low as 106 as well back in, was it late 2021 or early 2022? Anyway, according to Wedbush, Dan Ives, Tesla has got their mojo back, and they are very excited for the end of the year. They believe huge rebound in delivery performance. We're already seeing the data out of China signifying that, and they remain confident Tesla's ability to hit 1.8 million deliveries for FY 2024. I think Tesla will want to grow despite how rough a year it was. In fact, if you look at this chart again, you'll see how disastrous January was. That was a time in the market where nobody had any money to buy cars, and that impacted things. But now everybody's catching up, and with the cut in interest rates is helping things a lot as well. Also, 1010 is less than 2 weeks away, and that's going to be very exciting. Updates around FSD, AI, robotics. And the next phase of Tesla growth is all autonomy, all AI, all energy storage. It's going to be fantastic. And the levers that they can pull to turn on margin is like no other company I've ever seen in 35 years looking at companies. Now, shout out to everybody in Florida. Very bad hurricanes, lots of flooding. Hope everybody's okay. But this thing has come into its own. Cybertruck owners are using wade mode to get around. And you can be in over 3 feet of water for over 30 minutes, helping people, dropping off supplies, rescuing stranded people as well. So it's another little advertisement, a little bit of a versatility there from a truck that would never sell with over 2.4 million people on the waiting list. Yeah. And they're launching in Mexico and Canada as we speak. So shout out to everybody in Mexico and Canada. You're going to get your Cybertruck soon. Now, switching gears, Peter Thiel is dumping his Palantir after 21 years. He was one of the co-founders, along with Alex Karp and others, and he sold nearly $1 billion this year, another $600 million this week. So typically, it's like, Huawei, you always watch what the big players are doing, but he's not just selling a little bit for lifestyle chips. He doesn't need lifestyle chips. But something happened, because he's been a big believer, but something has happened and he has just gotten out. Not sure exactly why. And if you look at the chart here, you'll see Palantir is exactly back to square one, where they were back in Feb 2021, around $36, $38, just sub 40. And that's where he sold. He didn't sell back in 2021. But he's selling now, so for those who hold Palantir, we'll see where it goes next, but it's never a good omen when one of the guys that's inextricably linked to the asset is selling such high amounts. Or maybe he's just very good at calling tops. We'll see. And PCE inflation is at the lowest level since Feb 2021. And, a lot of people are hoping for that Goldilocks soft landing. But inflation moved down to 2.2% in August. That's the lowest again since Feb, early 2021. Speaking of Feb 2021, that's exactly when Palantir hit the previous all-time high. Interesting. That just clicked with me right now. Anyway, coincidence, patterns, that's what we look at here. The market is now pricing in another 75 basis points in cuts before the end of the year. Woohoo! They see stuff in the data to them that is very alarming. We know commercial real estate's dead. Real estate is getting hurt. We know manufacturing is in a toilet. The manufacturing numbers out of Richmond were absolutely disastrous. And unemployment is spiking and getting worse. So hang tough, everybody. we'll see. But things will probably get a little bit worse and they get better. But where things are also very bad, and now the government is also taking action, and that's why we're excited. Oh, did I forget to add my global liquidity chart? I did. I'll add it tomorrow. But we broke $100 trillion in global liquidity. I made a video back in December 2023. One of my forecasts for 2024 was we would break $100 trillion in 2024, and we just did it yesterday, which is huge. But what's also happening too is Chinese stocks are on fire. China revealed a huge stimulus package to boost liquidity, help its economy, and prop up its stock market. It's making a $113 billion facility to boost lending and let banks borrow money to buy Chinese stocks. Think about that. Hey, let's pump our stock market. We'll give you close to free money and you can just buy our stocks. Why not? And when I bought this one, I got into BABA during C19 in March 2020 and exited, did my usual end of year win, and it went on a tear. It went from, 80, 90 to like 300. But here we are back again. It fell into the kill zone also back in February, but 2024, it was down around 60. And I bought, and people were like, oh, what are you doing buying Chinese stocks? Bad. Don't buy communist things. You can't trust them. Well, here we are. So it's nearly double since then. And that's what we do. And BABA, it was a toss-up actually between Baidu and BABA, but I thought BABA was more undervalued at the time, and that proved to be correct as well. So this will continue to go up, so hold on to it. I say don't think about taking profits till at least 160 or so, and it could even go back to all-time high, which is about 320 or 360 if I'm not mistaken. And here comes the Sidelined cash. Also, this will also pump all our bags, not just in China, but also in the US. This is from JP Morgan. Bankers have told their clients with 10 million in cash or above, they would see their savings rate cut by 50 basis points, and future cuts would move in lockstep with the Fed's actions. Because of the Fed's rate cuts, banks will certainly have the ability to reduce deposit costs. Now, remember, if you have 10 million at JP Morgan, which many of us do, of course. Kidding. We don't hold that much in melting ice cubes. They were paying out maybe 2% interest, maybe 1.5%, and they were getting 5+% on treasury bonds. So they're making huge spread, 3.5% on your money that was deposited there. Now they're warning their customers with big bags, 10 million plus of cash, you're not going to get your 2% or 1.5% anymore. It's going to be cut down to 1%. What do you think is going to happen to all that money? Yes, they're going to chase alpha because they know getting 1% on your money is worthless. So all this money, the $6 trillion on the sidelines, is going to come into the stock market. It's going to come into risk assets. It's going to come into Bitcoin ETFs and a whole bunch more. And that's going to be mobilized, a lot of it, over the next 3 months, I reckon, too. And mortgage rates are tanking, which is good for real estate. You can see we're down off the high of 7.79%, down to 6.08%. Shout out to Charlie Bolello. And that is good. And it's going to go further. But there is still quite a big delta between the actual real interest cost and mortgage rates, like 2.5%. That has to come maybe even a little higher. That has to come down a little bit more as well over time. So expect mortgages, if you have to do a refinance, try stall as much as you can because things will be a lot lower in 6 months. And interest on government debt. Speaking of interest, if this doesn't scare you, I don't know. Well, if this and the CBDC slide doesn't scare you, this is from EJ Anthony. Inflation is how government will finance the debt. They will be paying about $2.75 trillion in interest by Q4 2030, maybe a lot more because deficits are exploding. And the inflation adjusted amount will be $1 trillion. Okay, so true amount, 2.75 trillion. Real amount after inflation, 1.75 trillion. This is why Bitcoin, money printing is going to go bananas. The value of your dollar is going to tank. Own hard assets, ladies and gentlemen. That's Friday Fire. Thank you all for coming. Hope you like the show. And I'll see you all tomorrow. Have a good night.